And welcome to Halftime Report. I'm Sonia Shenoy, and with me is Ekta Batra, who's going to join in just a while from now. For the market, it's under pressure. There's no two ways about that. The Nifty is down almost 200 points, and not once in the day has there been any kind of profit or any kind of recovery just yet. So that seems to be the disappointing bit for the market, at least disappointing for the bulls. The Bank Nifty is the one that's taken a big hit this afternoon, 600 points lower on the Bank Nifty. The only saving grace is that we've had big gains under our belt. The market is up about 4-5% for the month already. So this is some profit taking that perhaps is the need of the hour or was expected by a lot of people in the market. But let's move on. There's lots happening in the pharmaceutical space. Dolo maker Micro Labs is in the eye of the storm over allegations that it has distributed freebies worth over 1,000 crore rupees to boost sales of the paracetamol drug that was widely prescribed during COVID treatment. Ekta is here with an explainer on how Dolo's sales zoomed since the onset of the pandemic and what the allegations suggest. Ekta.
Thanks for that. Well, yes, Dolo 650, which is the fever and pain-reducing medicine which shot to fame during COVID-19 and in many instances is now becoming the go-to pain-relieving drug, has come in the line of fire recently. Allegations brought up in the Supreme Court were that the manufacturer of Dolo, Micro Labs, distributed freebies worth around 1,000 crores to doctors to prescribe the 650 mg drug. Interestingly, during the period of March 2020 to Jan 2022, the oral pain market grew 23% due to COVID-19 related demand. Paracetamols were prescribed over other molecules such as ibuprofen to treat COVID. And it's during the COVID-19 period of around March 2020 to Feb 2022 that Dolo 650 mg rose to become the highest selling paracetamol drug. In fact, during this time, the Dolo brand, led by the 650 mg dose, grew to enjoy 22% share of the 3,100 crore worth of paracetamol-based drugs sold during the COVID-19 period, which means 22 out of 100 people were choosing to buy Dolo amongst all the paracetamol drugs during that time. And in terms of sales for Dolo, the 650 mg dose, despite being under price control or the national list of essential medicines, managed to generate sales of over 300 crores in COVID-19 during the period of March 2021 to Feb 2022. The sales in some cases touched over 10 to even 30 times of other comparative drugs in that space. So what could have happened? Interestingly, the Dolo 650 mg brand was launched in 1993, was one of the first movers in the market, and has at one point even enjoyed 80 to 90% market share in the 650 mg category. Eventually, the market share settled at around 50%. This has shot up to 58% during COVID-19. Interestingly, the Dolo brand sees this kind of stickiness only for the 650 mg variant, despite selling other mg variants as well, such as 500 mg. What tends to happen, doctors and experts point out, is that the brand becomes sticky. Keeping allegations of freebies aside, experts point out that 650 mg has in fact become a regular dosage for adults when it comes to paracetamol for years. And doctors tend to follow other doctors in terms of prescribing a drug, and this was possibly even more during a time of uncertainty, which was during COVID-19. Dolo, experts point out, grew because of the strong word of mouth, resulting in the brand almost becoming a default drug during this time. To illustrate it better, experts cite the example of Crocin. The drug enjoys one of the strongest reputations amongst the pain and fever relieving brands when there are many substitutes available. Similarly, Calpol is more associated with children but is also available for adults. And from the ibuprofen category, Combiflam is one of the top 100 brands in the country, whereas other substitutes don't see equal traction. Lastly, while the jury is out on whether or not Micro Labs did dole out freebies, no pun intended, the company says the 1,000 crore figure is indeed data which is generated over many years across their 14 divisions and a 6,000 strong field force. In fact, the only freebies, according to them, that they did give out were the ones allowed, such as books, pens and small mementos. They say the company, meanwhile, says it is currently cooperating with the investigation. All right, let's take this conversation forward. We have with us Jairaj Govindraju, who is the Executive Vice person at Micro Labs to talk about this, Vice President at Micro Labs, who's joining in now. Mr. Govindraju, hi, thank you very much.
Hello.
Thank you very much for joining in. First of all, if you could just describe to us in terms of what is it that companies such as Microlabs give free to doctors?
As I have told already, you can't call it freebies, it's brand reminders. We have to remind the doctors about our brands. Therefore, we give samples, we give pens, pads, and some books, and some tabletop items like a pen stand or diaries or these kind of things we give. And for Dolo 650, we cannot have given anything bigger than this also, because it was under price control for several years. And also it's a low MRP product. And also it's such a common product that, with the regular promotion through our 600 strong field force, we were giving a traction, the last 25, 30 years. Every year we were having a very healthy 30-40% growth. And especially whenever an epidemic breaks out, it even shot up to 70-80% or even doubled. And some of the lower selling states, they even had a more than 100% growth. And whereas states with high Bs, they did grow at 30-40% or even 50% during the epidemics. This is a normal phenomenon. So we didn't deviate from that, except that we intervened and we said we'll give a scientific thrust to our promotion. And we started giving a lot of scientific information on fever, various kinds of fever, because fever is just a symptom. And there were a lot of unknown facets of fever, which the feedback we got from the doctors. So we are educating, giving scientific information on them regularly for the last 4 years through CME programs and lectures and things like that, which was all absolutely, within the UCPMP guidelines. And we were doing everything possible within that only for Dolo 650.
Okay, all right.
So that is, and obviously during the COVID also, Dolo 650 became paracetamol 650 became the protocol drug for a fever category as per any guideline, international or ICMR guidelines or any local government guidelines. Paracetamol 650 became the protocol therapy. So all the protocol drugs, they got very good traction, including Dolo 650, apart from vitamin C and zinc combinations and some antibiotics, some antihistamine combinations.
Sure, that point is taken.
They all got this traction. Not only Dolo 650.
Okay.
Every brand got this.
Can you then just give us, you've said that you've been doing some kind of marketing and promotion expenditure for the past 4 years, getting doctors to be more aware of the usage of the 650 mg dose. Can you quantify the annual spends which you have done, say, when it comes to marketing and promotion, say in the past 4 years, and how much was it during COVID-19? How much did it increase during COVID-19 for Dolo 650 mg in particular?
Exact figure I wouldn't be knowing, but we are in the process of compiling the data. But in any case, as I look at it, it will not cross 2 to 3% of our year's turnover. Particularly during COVID, even beating doctors became a challenge. But still, we were the COVID time. The only difference we adopted was we gave a lot of masks and sanitizers, hand sanitizers to the doctors. Co-branded with Dolo 650, apart from our scientific information through books and all that. Yeah, and pens and pads. Apart from that, we were also adding, hand sanitizers and masks very regularly.
So you're saying there's this allegation of 1,000 crore, this allegation of 1,000 crore of freebies is completely inaccurate, is what you're saying?
Yeah, it's inaccurate. It is a kind of wrongly picked up. And it is getting circulation.
Okay.
It is 1,000 crores for several years for across the division, but somehow it got picked up like 1,000 crores on Dolo 650 during COVID. Absolutely baseless. Any figures you look at it, even your presentation also made it clear. 350 crore brand, 1,000, and that to a brand under price control. 1,000 crores spending on that. It just doesn't. It wouldn't have made sense to any company, and obviously it didn't make sense to us.
So what is the period under the investigation, Mr. Govind Raju? You said it's 1,000 crores across a period. What is the period under investigation?
It's several years for the entire, all divisions. It's not under investigation. They've asked, it has been found that we have spent 1,000 crores and we are giving explanation on how we spent that 1,000 crores across the division for all brands. Once again, I would like to say that. Not for Dolo 650 is not under in the investigation or anything of that sort. It's only the reports which are come out which talk like that. Yeah.
Okay. Mr. Govindraju, you know, there was a press release from the IT department which was dated 13 July, and while it doesn't name the company specifically, that's exactly where the details with regards to freebies worth 1,000 crores probably came up. And that indicated that freebies included travel expenses, prerequisites and gifts, etc. to doctors and medical professionals for promoting the group's products under the heads promotion and propaganda, seminars and symposiums, medical advisories. What would your response be? Because you've said that it was limited to books, pens, mementos, but here it clearly says that freebies could probably have included more, which is such as prerequisites, travel expenses, gifts to doctors.
Well, certainly it is mentioned, and everything is under the law, and we have been law-abiding citizens all the time, and we are going to give that explanation, and that is going to be the thing. It's not anything worrisome or something. Yes.
So the data which the IT department is probably indicating, this 1,000 crores of freebies which were allocated by to doctors, the period of investigation, according to you, it goes beyond COVID-19?
100%. It is
so how
several
many years?
Maybe 5, 6 years, 7 years.
How many years?
I don't
Do you
know
have an indication?
what all the documents they have collected. Yes, yeah, it's several years. It is not 1 year. It is not one brand.
Okay.
Certainly not.
The IT department press release also indicated that the group has been debiting in its books of accounts unallowable expenses on account of distribution of freebies to medical professionals under the head of sales and promotion. Can you just give us an explanation for this as well? For these allegations or these allegations which were brought up? Yeah.
As of now, we have not been investigated on. I mean, I have not been investigated on this, or I didn't have to give any explanation. And whatever explanation is required, our company has been giving to the IT department, and we should come out clean. That's not a problem. Yeah. Okay. There is no, worry factor for us in that.
So you had said that during the period of COVID is when you used to give all those, brand reminders, samples, etc. Are you still doing the same? Are you still giving out any freebies?
Samples are going, and yes, pens and pads are going. Yes, it is regular. We have not stopped anything. Yeah.
Okay.
Okay.
Any kind of legal recourse that you plan to take, Mr. Govindraju?
There is no standing. We don't have any ground to go for a legal recourse, because it's all the reports which are coming up, and we are giving explanations. As of now, I don't think we have any plans to go for a legal recourse.
Okay, all right. So you're just, as of now, just providing the information which is required.
Yeah, whatever.
Okay, can you just break up the sales for us for 650 mg during COVID-19, say in March, in 2020, 2021 and 2022?
I wouldn't be having the figure I can share it with you, but right now I don't have the figures. But last year sale, I remember, because it came up. Last year we sold 362 crores of Dolo. That's the figure I remember very well. And probably the brand grew by about 80-90%. So previous year it would have sold around 270, 260 crores. The previous year, perhaps 200 crores. No, that is what we have been celebrating. 150 crores landmark, 200 crores landmark, and 250 crores, and suddenly it jumped to 360 crores. I remember. This is the bulwark figure that I can tell you. Off the cuff.
Okay.
But exact figures I don't.
And the other variants have not shown as much traction. What are the sales of, say, the 500 mg variant of Dolo?
500 mg variant of Dolo is very small, because we were very late entrant in that. We jumped into 650 milligram in 1993. 500 we came somewhere around 1998 or 2000. And at that time, there were again big brands. All the brands that you mentioned, they were all having 500 milligram, and they were very big. Very difficult to get that kind of penetration when there are big leaders there. Like the way 50 milligram, they are not able to get any headway. It's not big, yeah.
So you're saying that you jumped to over 350 crores from 150 crores on Dolo sales. That's a big move. Can you tell us what was the market?
Not in 1 year.
Okay.
150 crores to 350 crores happened over 3 years.
Okay, got that. Over 3 years. So can you tell us what was the market share gains as well? 3 years back, what was the market share you enjoyed and how much has it gone up by?
Yeah. We had a market share of 50% 6 years back for Dolo 650. And after the COVID, it has gone up to 58%. 8% shift in 6 years' time. So that is the market share gain, which is not a very unnatural or, I mean, something spectacular or something. Of course, because other brands also did well in those categories. Even though we are the leaders, the other brands also 650 milligram did well in those categories. Therefore, our market share didn't gain substantially, though everybody says doubled, but our market share gain was 8%. Others more or less maintained or they gained 1 or 2%. Of course, being a big brand, it is our mark. We got the biggest attraction. Even in our latest IQVIA reports, it very clearly showed that bigger brands gained a lot during COVID. Any category, the biggest brands, they gained a lot during the COVID.
Okay, that's interesting that the bigger brands saw more traction during COVID-19. But Mr. Govind Raju, with regards to the IT department, you've said that you are complying with all of the data which is asked for. But what were the specific questions and what was the specific data asked for?
Well, as far as Dolo is concerned, they wanted to know what was the spending and, whether it is our books, what are the kind of books you gave, we gave us, that kind of things. And when you CME programs, it shows the, programs proof and all that. That's all it gave, yeah. I mean, the explanation for each and every item we gave and a sample plan for the, it is regular investigation. I wouldn't like to go into that. Regular questions were asked and we are given all the.
But this is the first time that you've been asked such questions, correct?
I think IT rise have been, periodic, sporadic. It has been happening for every company, and we are not exception.
And what are the other?
The media has caught up now, mainly because we were also, Dolo was in the media in January, February, for the very positive reason that, the product was made available in every nook and corner of the country, even though it was under, say, a price control. And every citizen of this country, they had access to the drug without any kind of shortage, thanks to microlabs. Positive response was coming in the January. And because of this popularity, probably we are having this, even though in our routine IT, right, is giving this kind of negative publicity now, which is okay. I mean, we're giving explanation for that.
Okay, besides the IT department, any other government agency which is actually probing into this?
No, nothing. Not I'm aware of. Nothing. Yeah.
Okay, all right. Sonia?
All right. Okay. Sir, thanks a lot for joining us and giving us all of those clarifications. Appreciate you fielding all of our questions as well. All right. Okay, well, the stock on our radar right now is ITD Cementation. It reported a decent set of earnings for the first quarter as the company recorded growth in their revenues, EBITDA and their net profits. However, the company's margins contracted on a consolidated basis. Prasad Patwardhan, who is the CFO of ITD Cementation, joins us now to talk about that. Mr. Patwardhan, good afternoon and thanks for joining in. I want to start by asking you about the outlook on the business. How is the demand situation currently and what kind of visibility do you have in terms of orders?
Good afternoon, Sonia, and thank you for having me on your show. The outlook and visibility for our business appears to be pretty good. We received a good lot of orders in the previous financial year, 7,700 crores. And this year, in the first quarter itself, our order booking has been in excess of 6,000 crores. So our order booked as of today is in excess of 20,000 crores, which gives us a very good revenue visibility for the next 3-4 years at least. And the good part is, with the government's focus on infrastructure development, we are seeing a lot of projects coming up for tendering and bidding. So overall, the outlook seems to be pretty good. And with commodity prices also cooling off now, I think we should be in for a good time for the infrastructure sector in this year and going forward.
So you said, you said your order book is in excess of 20,000 crores at the moment, but none of that hasn't actually reflected in your earnings, right? I mean, I was looking at it on a consolidated basis, your revenues are actually down by 6%. Is it because this was a lean quarter? When do you expect the orders to reflect? And what is the expectation on revenue growth by the end of the year?
Typically, the June and September quarters are a bit lean because of the monsoons. And, our order book has grown. Significant orders that we have won have been in this quarter, that is the quarter ending June 22 and in the previous quarter. So these orders, Chennai Metro orders and the Ganga Expressway road project that we were awarded, those have not really, contributing to our top line so far. In a big way. So we expect these projects to pick up steam, the execution to pick up maybe from Q3 or Q4 onwards. And that is why, the outlook, the growth, revenue, visibility and the growth for this year, we are maintaining as of now at about 25%. The growth as compared to the previous year, we expect about 25% this year.
All right, so you're expecting around 25% growth to be maintained for FY23, or that's your guidance which you're maintaining at this point. I just wanted to understand that the incremental orders, where exactly are you seeing maximum of it coming from? Government, PSUs, private? And private I ask because it gives an indication on whether or not private corporate capex is actually picking up. So where exactly is the incremental order inflow coming from?
Well, we have seen a mix of orders from the private sector as well as from the government. So a couple of large orders that we won earlier this year were from Chennai Metro, underground metro projects worth about 4,000 crores. Last month or a couple of months back, we received a very large road order from Adani. So that is, as far as we are concerned, that is a private sector order. It's a greenfield road project that has been awarded to us, which is part of the Ganga Expressway. So we are seeing traction in both, but typically in the Indian context, infra is, the more focus is from the government. So we expect a lot more orders to come up in, whether it is metro or marine projects, or even expressway projects to come in from the government spending.
Okay. Can you give us an update on these two orders, the Bangalore Metro project as well as the Adani project that you just mentioned?
Well, the Bangalore Metro underground project was awarded to us about 2.5 years back, or maybe 2 years back. We started the underground tunneling on that project about 14-15 months back, and that project is progressing very well. It's going on as per schedule. The Ganga Expressway project was just awarded to us just a couple of months back. So the preliminary work has just commenced. And that is why I mentioned, that the real execution will pick up from Q3 or Q4 onwards. And that is when we'll see these new orders, begin to contribute to our top line and our margins.
Okay. Can you help us with what the debt on the books is at the moment? And has there been any change? Because as of FY22, your debt was around 515 crores. It's gone up, bit by bit over the last couple of years. What is it right now? And any plans to bring it down?
Sonia, the gross debt level has not changed. Gross debt level continues to be in the range of 500 crores. What happened is in the previous quarter, we received a lot of payments from our customers, especially towards the end of the quarter. So we were sitting on a large cash balance as of March 22. And that money, a lot of that money has been deployed now in our project execution. So while the gross debt level remains unchanged, it is the net debt that has gone up. And our endeavor is to, keep a lean balance sheet and not increase the leverage significantly. But given the new orders that we have now received, we need to spend some money on mobilization, and we'll use a judicious mix of, external debt as well as customer advances to fund the additional requirements.
You did manage to improve your margins on a Q-on-Q basis, 8% or 8.2% versus 7.2%. So there was a 100 basis points rise. What can you guide for? Because it's still lower than, say, what you did same time last year, which is closer to 10%. What are the margins that you're executing on current orders, and what would your blended margins be?
We expect our margins to start improving from Q3 or Q4 onwards. There are two things. There were some legacy orders that we have in our order book, which are nearing completion, and we were not booking any profits on those projects. In fact, in the earlier years, we have booked some losses on those projects. So those projects should be out of our order book in the current year. And as the commodity prices start cooling off further, we expect our margins to improve from Q3 onwards this year.
Okay, all right. You were talking about the Bangalore Metro a while back. Can you tell us just one more question on that? When will it start contributing to your revenue stream?
Bangalore Metro is already contributing to our revenue stream. Okay. There were 2 orders from Chennai Metro that we received in January, and those are still not contributing to our margins. They will start contributing towards the end of this year. And the road project, obviously, we just got it a couple of months back, so it is not contributing to either our revenue or our margins as of now.
Okay. All right, Mr. Patwardhan, we leave it at that. Thanks a lot for joining in. That's ITD Cementation. Let's do one thing. Let's slip into a quick break. Markets are under a lot of pressure. So Jay Thakkar of Marwari Share Broking will be with us to give us some strategies on the other side. Stay tuned.
Welcome back. Well, it is lively for specific stocks. So, for example, DB Corp is seeing a lot of traction. That particular media company is up around 13-odd%. It's gained around 16-odd% year to date. Today, it spiked up quite significantly. Separately, we have even something like a Gujarat Gas, which is up around 1.5%. Phoenix Mills, which is up around 1%. Zomato, which had a bit of a tough week last week, is seeing some amount of buying now. So that stock is up around 1-odd% as well. Jay Thakkar of Marwari Shares and Finance joins in to discuss the technicals of the market. Jay, hi, welcome to the show. Well, it's definitely tougher for the banks as compared to the Nifty as well as the mid caps. What is your suggestion on the indices this afternoon?
Hi, very good afternoon to you, Ekta and Sonia. Well, as far as the Nifty is concerned, definitely it has reversed from 18,000 levels, and now that level seems to be a very clear resistance, at least for the remaining part of this monthly expiry. And the probability of Nifty moving above the levels of 18,000 till the expiry is difficult. In fact, the near-term resistance are pegged at 17,700 to 17,800. So any bounce near to 17,650 should be utilized as a selling opportunity. So sell on rise should be the strategy on Nifty. I think that it will go and test the levels of 17,500 first, and that's the crucial support for this monthly expiry. And if 17,500 level gets broken, then the next support will be thereafter 17,300. So my view, at least for the short term, is to sell on rise on the index, with a stop loss above 17,800 and targeting 17,500 and below that 17,300. I've got two recommendations as far as stocks are concerned. One is a sell recommendation and second is a buy. I'll start with the sell recommendation first. One can sell Divi's Lab at the current market price of 35.64. These are the spot levels. We have clearly seen a good short build up out here, a good breakdown from an upward sloping channel. So the bounce overall seems to have got over. In fact, the entire bounce was quite corrective. I would say the move was very overlapping, and the momentum seems to have gone into the sell mode again. So the overall trend will be negative for Divi's Lab. One can sell this targeting 34.50 initially, and thereafter 33.70. These two will be short term targets, and on the upside, one can place a stop loss at 36.10. The buy recommendation is on Z Entertainment, which has clearly provided a breakout from an inverse head and shoulders pattern. In fact, the volumes have come along with the breakouts to surprise volume breakout, and momentum also seems to be quite in favor of the bulls. The stock is trading around the levels of 264. These are the spot levels. One can buy this placing a stop loss below 248, and one can target 290 to 300 on the upside.
Okay, thanks a lot for that, Jay. Have a great day. Thanks for giving us all of those stock ideas. Well, a quick reminder for our viewers, it's that time of the year again. Money Control Pro's Financial Freedom offer is back with added benefits. Get a Money Control Pro subscription at net zero cost by claiming exciting offers worth 1,500 rupees from our partner brands. Grab the benefits now only on the Money Control app or the website.
Welcome back. Well, let's discuss some more stocks in news then. Adani Power is surging on the news of its impending acquisition for DB Power's thermal plant for a little over 7,000 crores. Rima is here with more details on this.
Well, I'm actually tracking Adani Power because they've agreed to acquire DB Power Limited for an enterprise value of more than 7,000 crore rupees. DB Power operates and runs a 2 into 600 megawatts thermal power plant in the Champa district at Chhattisgarh, and the acquired company DB Power had an annual revenue of 3,500 crore nearly in FY22. Now, the reason for Adani Power to acquire DB Corp's thermal assets is it will help Adani Power expand its offerings and operations in the thermal power sector in the state of Chhattisgarh. Back to you.
Okay, thanks a lot, Rima, for that. Well, Ekta, you're tracking a couple of more stocks. What do you have?
Well, yes, I'm tracking a bunch of stocks. So I'll start with Greenlam Industries. There is a commencement of commercial production of their laminate facility at Gujarat. Currently, they have an installed capacity of around 3.4 million laminate sheets per annum. And this has the potential to generate revenue of 150 crores per annum on full capacity utilization. Separately, Paytm, which is the big stock that we're tracking today, 99.67% voted in favor of Vijay Shekhar Sharma's reappointment as the MD and CEO for 5 years, and his remuneration is fixed for the next 3 years without any annual increments. So that seems to have probably enthused a little bit of confidence in the stock today. And lastly, Tanla Platforms is the other one that I'm tracking. They granted a patent. The patent is basically valid for a period of 20 years. So that stock too is in focus on account of that. We have some news on Subex as well, where they've bagged an order.
Okay, well, moving on to the gold financing space, VP Nandakumar, who's the Managing Director and CEO of Manappuram Finance, has told CNBC-TV18 that gold loans to lower economic segments are below the pre-pandemic levels, and that could keep the growth quite muted in this fiscal. The company said it's not losing any business to banks, though, so that's not a cause of concern. Listen in.
What is happening is NBFC customers, mostly from the lower end of the pyramid, their demand has come down. They were typically the customers of an organized sector, and they are now our customers. So that segment is yet to pick up. It is started slowly picking up, but it has not come to that pre-COVID level. It is still lagging. We hope things will improve in the coming 2-3 months. Only from the existing customers, there is some sluggishness in demand. So what I look forward is in 1 or 2 quarters, the numbers will come back. Both growth will come back. And here onwards, we feel like it will slowly grow. This year itself, we expect from that stage to a growth of around 5 to 10% this year. Next year, our usual growth of 10 to 15% will be achieved. This is our expectation.
Okay, so that's a 10 to 15% growth that they're looking at, and they say no, they're not losing any business to banks, and neither is anyone else in the industry. All right, well, that's one opinion coming through, but the market has been showcasing some amount of pressure on Manappuram Finance. Let's slip into a quick break. Up next, we put the focus on Shilpa Medicare, which is reacting to news. If you want to know why, do stay tuned in. Shilpa Medicare is surging in trade today as the company has completed phase 3 human clinical studies for biosimilars Adalimumab. Ekta, did I pronounce that correct?
Yes, you pronounced it perfectly.
That's the biggest problem, but yeah, tell us why the stock is up.
Well, that's the reason, because they've completed phase 3 human clinical trials of this particular biosimilar, and now they've submitted their dossier to the CDSCO, which is basically the Indian drug regulator, for review for the marketing and manufacturing approval for this particular biosimilar. They are going to be launching it in a higher concentration, which is around 100 mg, and that, according to them, should probably see more offtake going forward. Now, the drug itself is a very popular drug. It is used for multiple indications across the globe, so that's why it has strong market share across the globe. It is used for arthritis, plaque psoriasis, ulcerative colitis, and the company expects to commercialize this product in India as well as the rest of the world starting end of 2022. The company says that they're basically building a strong biosimilar portfolio. This particular biosimilar itself is built in their own Indian facility. So what this does is that maybe the Indian market would not give them as much traction in terms of sales for this biosimilar as compared to, say, a regulated market. But nonetheless, it's testament to the fact that the company has the ability, Sonia, to make this kind of biosimilar as well, and have the ability to make a complex drug.
Okay, well, that's on Shilpa Medicare, a big boost coming in from the biosimilar space. But in the latest round of rebalancing, the FTSE has included a couple of stocks. Bharti Airtel's partly paid up shares into the positive list. There's actually a whole host of stocks that are doing pretty well because of this FTSE rebalancing. Just wanted to get that up on board. The important ones in the migration to a large cap are names like Tata Elxsi, TVS Motor. In any case, these are stocks that have been doing well lately. Varun Beverages as well, and HAL along with 197 Communication. There's also a migration to mid caps with names like CG Power, Gujarat Fluoro, Indian Hotels, Linde India and Schaeffler India. So keep an eye out on them. in the migration from large caps to mid caps. So kind of like moving lower. There are names like Aurobindo Pharma, Gujarat Gas, Lupin, NMDC, SAIL and Vodafone Idea. While there are 24 stocks that have been added to the small cap space. So this is what's happened with respect to the FTSE rejig. The changes will come into effect from the 16th of September. But TeamLease is one stock trading in the green today. Earlier, we spoke to Ramani Datti of TeamLease on the key hiring trends and their demand outlook. Listen in.
In the beginning of the year, we have expected very high demand from manufacturing, infra and engineering industries, maybe with the back of PLI schemes and other initiatives by the government. But unfortunately, we are not seeing that much of demand on the ground within manufacturing and engineering segments. We are planning to have at least 18 to 20% headcount growth in our general staffing business this year. So this is the minimum number that we are confident. In case if there is a recovery and better numbers by the festive season in Q2 and Q3, we may close with a slightly better numbers as well.
Okay, so that's the management of TeamLease. We need to...
Welcome back, and joining us now on the show is Peter Mcguire, CEO at XM Australia. Peter, hi, good to have you. And I'm looking at metals and the kind of reaction that one would have expected but didn't come because after the Chinese cut interest rates yet again. But it really is a quantum, isn't it? 5 basis points and 15 basis points for 1 year and 5 year doesn't really cut it.
Exactly right, Manisha. Good afternoon. I don't think it's any surprising news. In a lot of ways, it's probably underwhelming, isn't it?
It is.
And when we take on board what the situation is in China, it needs a lot more than that.
And the stimulus is something that we've been waiting forever. I mean, there have been a lot of conversation about it on how infrastructure and construction and SMEs would be supported, but that is also yet to come.
Exactly right. You know, and they've got their hands full with the property sector, what's going on with energy demands, weather outages, and everything that rolls into that with high gas prices. So, yes, we've got some major issues across the China basin, and I think it's going to be a tough next 5 months leading up until the end of the year. You still haven't put COVID to bed, Manisha. It's still, you know, very much on top of everyone's radar.
Oh, well, yes. And, you know, the top 3 lines really are on China. The next one, Peter, really is about the power rationing that China really seems to be putting out, the kind of drought alerts that they've put out for the rest of this year. Yeah. How are you reading into that?
Well, it's immense. You've got major weather outages and you've got extremely dry conditions across a lot of China. So the demand is very, very strong. And there seems to be a major concern. You know what the coal consumption's like. It just knocks it out of the park, you know, massive numbers. And the overall situation is it's got a little bit of a power struggle at the moment. Electricity demand is so high, and the overall picture leading forward could be quite dire for a lot of the commercials as far as production, supply chain issues, and all of that's going to take an impact.
And then it doesn't help with the dollar index trading at a 5-week high above 108.
Yeah, exactly. I'll tell you what, it's been bullish for the dollar over the last, say, 3 to 4 sessions. And I think the way it's going at the moment, I've got a 109 handle sometime this week because it's just strong. We've got the symposium in a couple of days' time in Jackson Hole. I'm not suggesting we're going to see any surprises from Jay Powell and his gang. But I think the overall momentum, it's the best out of a bad bunch.
Clearly. So when you look at the metals as a sector, and while the month of July was all right, because we did see some rebound from the kind of lows that we did hit, but the last week, or rather, let's say the previous week, clearly saw some selling come back. Have you turned bearish? I mean, have you turned into shorts again?
I don't necessarily think I'm bearish. I'm sitting on the sidelines just reviewing it because you saw such a big uptick over that, you know, some of those metal prices, understanding what copper did, and naturally, you know, the likes of zinc. So I think it probably outgrew itself. It was so dramatic, Manisha, that it's a time possibly for consolidation. We've got major issues. The German situation at the moment, and you've got a 500-year drought. You've got major concerns across their supply chains and their demand picture from energy. So the world is in a pretty tough way moving forward. I look at the PMIs, you've got them coming out this week, and it's not a good time to be in Eurozone or the UK.
Clearly. And what's your sense also on the energy prices? Because we've seen declines extend here yet again. Crude was down 2.5% in the previous week, 1.5% down yet again today.
Well, yeah, but it's still, it still seems to be range bound 90 to 100 for WTI and Brent. Well, I take your point, and I think there is a little bit of, a nice feel for consumers. Down a couple of bucks. It's probably going to be down 20 or 30 bucks to really feel it at the petrol pump. And the other side is that whilst that's going down, you've got nat gas screaming to the upside. Have a look what it's doing. So, yeah, I think that there's the trade at the moment. Everyone's long gas. And I'm just having a close eye on what's happening as far as weather outages with possible hurricanes starting to tick up later this month and certainly into September.
How are you looking at the Iran and the West nuclear accord, the deal, which reports say that is now pretty done? How are you reading into various reports on that?
Well, I mean, hailing it, Manisha, it's an ongoing, moving target, and I'm conscious of it, and I'm just going to see how it all drops. It's easy. It's easy to look at and be objective, but the other side is it's got to be, absorbed by the marketplace, and all those moving parts need to be put to bed. So I'm just going to see how it all plays, what impact it has to overall geopolitical. Well, not suggesting tensions, but the geopolitical situation across the Mideast and certainly with Iran, and just how all the eggs get laid, Manisha.
Okay, Peter, final question. So, if I had to really pick something in commodities, what is a better trade according to you?
I reckon nat gas. I think the demand picture, I think it could be very, very strongly bid up from here, and naturally the gas prices in Europe are, incredibly high. And I think there's even further height to go due to weather outages and the likes of supply chain disruptions and what we're experiencing with Russia.
Okay.
Okay, all right, Peter, as well as Manisha, thanks very much for joining in and bringing us those insights into the commodity space. For the markets, it is the Bank Nifty, which is taking a tumble. But if you have to see, we haven't really extended losses at this point in time. The Sensex still down over 600 odd points, the mid-cap index down close to 300 points, and the Nifty also showing a cut of around 1% odd. Just watch out for a couple of these banks, because that is where the pressure is today. That's because the Bank Nifty is underperforming. But even from the broader market, something like a Canara Bank is under pressure. So that stock too is down around 2.8%. IEX continues to lose ground. No recovery there despite some amount of positive news. So that stock too down around 2.6%. We're going to wrap up on a halftime report. But let's leave you with some market opinion from Nilesh Shah of Kotak Mahindra AMC, who says he expects the Indian market to consolidate and see a bit of a correction.
I think now the market has to take a little bit of respite and even correct a little bit. This will be driven by a variety of factors. One, the recently concluded quarterly earnings for June 22 quarter, that's marginally below expectation, driven mainly by some large stocks, and overall breadth of the earnings has been positive. So clearly market has discounted breadth of the earning, but it probably has to discount some disappointments in larger names driven in automobile or in oil marketing companies. Second, globally scenario doesn't look that good. There is a meeting at Jackson Hole where US Fed and other central bankers may try to be hawkish. That will weigh on the mind of the market. The only concern right now is that our valuation continues to remain above historical averages vis-a-vis our peer group. We have always traded at a premium, but today the premium is higher than our historical average. My recommendation is please do systematic transfer plan. Use every correction as an opportunity to invest. You'll have to invest on a bottom-up basis in a market like today.